China, the Shanghai Stock Exchange and the Shenzhen Stock Exchange. These two markets actually draw an interesting parallel between the New York Stock Exchange and the Nasdaq, respectively, in that one is a fair bit larger but tends to list stocks in more established industries, and the other is slightly smaller but has a larger listing of up-and-coming entities like tech companies. It also must be noted that the Shenzhen Stock Exchange is both geographically and financially very close to the Hong Kong Stock Exchange. Now, the big difference between these two mainland exchanges and their Western contemporaries is that they are owned by the government.
Okay, guys, so just so you know, the Hong Kong market is where my co-founder and partner of our trading community is. You see, many traders right now in the West, they're scared of this big thing, US delistings, right? I mean, we're looking at potential confrontation with the Chinese. But here's a fact check. And that's that you don't actually need Wall Street to trade Chinese stocks. You could buy them directly on the Hong Kong exchange, the HKEX, through something called Stock Connect. That means you could avoid delistings completely while still getting into the China's fastest building companies. Okay, in our trading community, we have a proprietary Chinese trading system, and you don't even need to speak Chinese. However, here's the problem. Most American traders think that the only way to buy Chinese companies is through ADRs or NASDAQ or New York Stock Exchange. So when Washington threatens to delist, they panic and they sell cheap. That's an opportunity for you. However, the smart traders, they just switch to the Hong Kong listing and keep riding the trend. Okay. Now, Stock Connect, which I have no affiliation with at all, solves that problem. And it's a problem where linking mainland China's markets with Hong Kong. It opens the door for international investors to buy shares of these Chinese companies directly without touching the US system. That means you don't lose touch with the stocks that get delisted in New York. You just get plugged into the actual listing. So let's go in here and see what
Shanghai Stock Exchange is a government agency, just the same as the tax department or the military. Given that China is, at least in theory, a communist state, the government sees the exchange of stocks as a public service that they will handle. Now, this causes a few key issues. For starters, it means that the government has control over what companies get listed and what companies do not. In a perfectly fair and impartial system, this wouldn't necessarily be an issue, but in this particular market, it might be. The other problem it causes is that the barriers to entry are just more difficult to get through. There are a long list of requirements to be a publicly listed company above and beyond the normal requirements of a privately owned company. This is true even in the United States.
See, that's the great thing about our community is that we actually have Americans, Europeans, all trading Chinese stocks, American stocks, crypto, but we focus on Asia, no doubt about it. Now you might hear, but isn't it unpatriotic to trade in China? Well, look at Microsoft, Tesla, Nvidia, Qualcomm, right? They all depend on Chinese supply chains and Chinese consumers. If you own those stocks, you're already basically involved with China, right? So the only question is, are you profiting directly or letting Wall Street middlemen at this point do it for you? Okay, so I'm going to give you guys an example. AMEC. It's called Advanced Micro Fabrication Equipment China. Okay, they build etching tools for chips at 5 nanometers and below. That's the same league of tech powered by, let's say, the AI GPUs. Now, most Americans have never heard of this, right? But institutions in Asia maybe are already loading up through HKEX. You could trade it directly while most Westerners have no clue. Okay, so now maybe you're thinking, but I don't speak Chinese. How could I ever trade? Well, good news, you don't actually need to. You know, HKEX and Stock Connect are accessible through global brokers in the US, UK, and Europe. And the tickers are in English. However, it's no harder than buying even Tesla. Now, in our trading community, we have a Chinese proprietary trading system that helps pierce that data in Chinese for you in English to help you get, calls and signals, but also learn about the Chinese market. Plus our partner in Hong Kong who gives commentary and his analysis from Hong Kong. But here's a protection you get. By trading through HKEX and Stock Connect, you bypass these delisted listings. So let's look at the video.
Requirements will be broken up into requirements from the federal government and requirements of the exchange. Normally, to meet all of these requirements, the businesses that have been listed will employ the help of an institution like an investment bank, who will also help to ensure the process goes smoothly, as well as underwriting the deal if it does not. What this means is that there are multiple entities involved that stand to make profit. The investment bank and the stock exchange are all directly compensated by how many listings they can get on board. In China, this isn't really the case. The exchanges are funded by the government, so if a business doesn't get listed or it takes 4 years for it to reach IPO...
I'm not saying my AI employee works harder than me, but he hasn't taken a coffee break since I installed him.
We just got hit with a commercial here, but I'll get right back into it. So basically, guys, the thing is that
the same sort...
Here we go. Sorry, guys.
Lots of limitations are true for when a company does actually manage to get listed. Rules around things like ownership structures, reporting standards, and who can buy the shares are very limited. For example, buying shares directly as a foreign investor is not allowed without significant vetting. And even if this does get approved, you are limited in your selection. For example,
Okay, guys, so just so you know, here's some protection you actually get when you're trading through HKEX and Stock Connect. You basically are bypassing the delisting risk, right? You bypass US-China politics, and you stop missing the upside of undervalued Chinese stocks, right? So while everyone maybe is panicking about regulation, you're actually already in the front row of the market, where the Chinese companies are actually raising the capital, right? So let's just do like a fact check for a second. China is not going away, right? It's the second largest economy at this point. It's leading in EVs, solar, batteries, and chips, AI chips. So ignoring it doesn't actually make you safe. It just keeps you broke, like a loser. And others are just riding it. So if there is an economic Super Bowl between America and China, right, you're better off at least having some of this in your portfolio hedged on the other team. Now, what Wall Street salesmen definitely don't want to tell you is that when you buy a Chinese ADR in the US, you don't actually own the stock. You own a Cayman Island shell company. That's called a VIE structure. But if you go through HKEX, you own the actual shares. That's better protection and less political risk. Okay? This is free sauce I'm giving you guys right now. All right? Like I said, we're the #1 trading community, Asia focused, on Discord since 2021. And here's where it gets even wilder. These Chinese companies listed in Hong Kong often trade at huge discounts compared to their, US listed versions. Same company, 2 listings. Okay. But the Hong Kong version can be 20, 30, even 40% cheaper. So Wall Street's selling you the expensive copy. However, Asia's smart traders are scooping up on the actual thing at a discount. And if you don't think this is just like some odd theory, BlackRock, Bridgewater, Ray Dalio, they've done it. Okay. They don't need mainstream approval to do it. They're just low-key went in, bought through HKEX and Stock Connect, let's say right now, or stuff like it. By the time the average US trader hears about it, the big move is basically gone, right? So in 2021, I partnered with a person from China who's in Hong Kong. He's a former investment banker. His name is Pablo Heeman. And we help traders understand how to trade in the Chinese market and crypto without ever needing to learn Mandarin and without any Wall Street middlemen. We give you the information. You can make your own decisions. And that way you're not missing out. Okay.